All right, what's going on, guys? Welcome to Stock Talk with Nico Kritikos. Today, we are going to be going through Meta platform stock, and I'm going to be talking about why I am bullish as well as what my price targets are. So, the reason I'm doing this is because Meta reported earnings yesterday, which we're going to go through the report, but the stock went from $511 a couple days ago. This was yesterday, it was $511, all the way down last night to $410. So, today it's down about 10% right now because it started climbing back up. But so I sold a couple shares when it was about $520 a share. This was probably a couple weeks ago. And then I bought back my shares yesterday when it was about $430. So I didn't buy them exactly at the lows, but I got them good enough. I'm happy with buying at the $430 price. If some more bad news was going to come out anytime soon and this stock goes down another 10-15% and it goes to $400 or below, like below 400, then I would definitely buy maybe 2 or 3 more shares, and I would be happy to do that. But right now, I'm kind of comfortable with this position size that I have. But anyways, Meta reported a great earnings report. So if we come down here, we can see $4.32 of EPS was expected. They did 471. Then we go to the earnings report. We see that their new metric of family daily active people was 3.2 billion people, which was up 7% year over year. Everything they reported pretty much was good, besides for the expenses, that what they're spending money on, and their guidance, because profitability is going to be slightly lower. It's not going to be a huge deal. All they did was, here it is, their 2024 full year expenses are now going to be between 96 to 99 billion, which is a lot. That's a lot. But prior to that, their range was 94 to 99. So all they're doing is barely raising it by a couple percent of, due to higher infrastructure and legal costs. Okay. And for Reality Labs, we continue to expect operating losses. So is that good? No. But let's hope that we can kind of trust Meta a little bit to be experimenting with these other businesses, that if they think they're going to grow the business with these things like Reality Labs and some of the metaverse projects, then let's hope it doesn't totally ruin the business, and let's hope in the long term it actually pays off. So here you got 2024 capital expenditures of 35 to 40 billion prior to the range of 30 to 37. So it's we're talking a 5% increase or so. It's nothing crazy. But everything else, I mean, as far as the actual numbers go, they're growing the number of users, they're growing ad spend, they're growing the price per ad. Everything was up. The cost and expenses were up 6%. So not, nothing crazy, but I mean, it's a slight increase. And they bought back, share repurchases were $14 billion. They're buying back a huge number of shares, and now they're paying out their dividend, right? So the balance sheet is $58 billion, and they decreased their employees by 10%. So they're going to save lots of money from firing 10% of their staff. They're buying back a huge number of shares, which is going to push the stock price up. They're still growing revenue, net income, and the number of users, the number of average ad spend, all that stuff. The only problem is, yes, they are spending a lot of money on things like Reality Labs, and they're doing $100 billion or 95 to $100 billion of expenses is a lot. So let's see what they did for. Let's see. Last year's revenue was what, 134. So they're spending, what is it? That's probably what, 70% or so of revenue on that. That's how much they got going out, and not in CapEx, but because CapEx is just what, 35 billion, but total expenses. So it's not great, but at the same time, we're talking about with those numbers being so big, we're talking about they're still netting $39 billion of profit for last year. So you got to think of things in terms of that. But here's my analysis. By the end of this year, I'm saying on the low end, we're looking at a stock price of $480, and I'm going to explain why. And on the high end, I'm looking at 640. So I'm going to say the median is about $560 a share, would be the most realistic or the most likely, or what my average case would be, $560, which is a good ways up from where we're at right now. So here's the main way I like to look at this. Here's the last 5 years of where Meta's PE ratio normally trades, their price to earnings. On the high end, as you can see, it hits about 32, and then that's the top, right? It seems to hit 32 as the top multiple times. And then 2022, you could say, sure, it traded at 13 times earnings. I think that's not going to happen too often. I think that was because we went through a really tough time in 2022. The whole market was in a really bad place and lots of things were out of control. I would bet that the next time this stock goes down, or the next time we have a market crash, I would bet that this stock does not go back down to 13 times earnings. I would say 24 times, which as you can see is pretty much right in the middle. 24 times is more realistic. But that's pretty much how I'm getting these numbers. That's why I would say that's the range I'm looking at. I'm looking at that. Okay. Now, here's the other thing. This year they're expected to do $20 of EPS. Next year, $23 of EPS. So you have to consider that too. Earnings are still expected to go up. So I would say this stock is a buy, even at close to $500, it's a buy. But at this price, I definitely would consider this a buy.